scene opens with Emily looking a bit overwhelmed, scrolling through home listings on her tablet. Emily. Phew, house hunting is a lot. The prices. It feels like you need a mountain of cash to even think about buying a home. How does anyone actually do it? Marcus enters, smiling warmly. Marcus. That's the million-dollar question, isn't it? Or more accurately, the several $100,000 question. Hi, I'm Marcus, a loan officer. And the short answer is, most people don't use a mountain of cash. They use a mortgage. Emily. A mortgage? I've heard that word 1,000 times, but I'm still a little fuzzy on what it really is. Marcus. You're not alone. Simply put, a mortgage is a loan you get from a bank or lender to buy a home. It's actually the largest form of borrowing for most households in the US. Instead of paying the full price up front, you borrow the money and then pay it back over time, with interest. Emily. Okay, that makes sense. So it's like a car loan, but for a house. And for a much longer time, I assume? Marcus. Exactly. Most mortgages are long-term, typically for 15 or 30 years. This spreads the cost out, making the monthly payments much more manageable. You make a down payment, which is a percentage of the home's price you pay up front, and the mortgage covers the rest. Emily. So, the interest rate is a big deal then. I've heard people talking about rates going up and down. What controls that? Marcus. Great question. A lot of factors play a role, but a major one is the Federal Reserve, or the Fed. When the Fed adjusts its key interest rates to manage the economy, it creates a ripple effect. Those changes influence what banks charge for all kinds of loans, including mortgages. Emily. So, when I hear news about the Fed, it could actually affect how much my future house payment will be? Marcus. Precisely. That's why it's smart to pay attention to those economic headlines when you're thinking about buying. A lower interest rate can save you tens of thousands of dollars over the life of your loan. It's all about timing and finding the right loan for your situation. It might seem complicated, but breaking it down makes it much less intimidating. Emily. Wow, that already clears up so much. So a mortgage isn't just a big, scary debt, it's a tool that can help you own a home. Marcus. You got it. It's the key that unlocks the door to home ownership for millions of families. Thanks for tuning in to understand the world of mortgages a little better. If this helped you out, don't forget to hit that like button and subscribe for more financial tips. We'll see you in the next video.